Hello, today is the 12th of March, 2022. We always start with our disclaimer. We go over our calls from Thursday night, look at the long-term picture, try to make some predictions for Monday's trade. This is my plan for trading on Monday. Remember, I can be wrong. Any trade one makes should be at one's own risk. Looking for the pattern Friday with the early high, we got that. And Monday's pattern, I believe, will also have the early high. We looked for a strong gap open, which we got. We gave a number of reasons for the gap being down, but we said gapping up couldn't be ruled out. And if that were to happen, all these targets lower were killed before the open. So this is just a review of what we said. Strong gap at the open, which we got. These are my calls for next week's trade. We also had a price target, 4219.03. When the target's lower and you gap up, the price remains, but the time has less confidence. This one happened to print within its preferred time frame. When you gap in the other direction, there's always a reduced probability of it printing within its preferred time frame, but the probability isn't reduced to nothing, and it did print, so that's already played out. MEJT said this move up wouldn't stick, it was false, so this drop would retrace, so this drop would retrace, and that's already happened. The afternoon gave a buy signal. That just means there's a higher target. Once the target prints, you're at resistance. Resistance doesn't have to hold, but the system doesn't require you to go further than that. This is the weekly chart. This is DeMark's TDST line. You're at support, but support extends to a bar under the line. So we could trade under this all next week and you'd still be in his support range. Doesn't mean you have to go under it. There's support right here. You just have to know that even though I think this is going to break at some time, right now you're in a general area of support by his work. Let's now look at the long-term picture. This was the count we've had since a few days after last November's high, which is here. You had your large green A ending in 2009. You have an ABC with great fibs. This being the Elliott wave top of the rally. We're now in an ABC in green capital C. So let's focus in just on that. We have this as an ABC for gray A. You could have gray A ending here, or gray A ending here, and if that's the right count, you want a gray B. So where is gray B? You could count it like this. You could even count it like this, but I think that's forcing the count a little bit. Doesn't really break any rules. If it happens, you might go with it. But it certainly would be a lot cleaner picture if we could count one more sizable wave up to complete gray B. We'll try to see if we can justify that. Now, longer term, we're on the verge of a crossover, the death cross of the 50 and 200 a day moving averages. I think no matter what happens, they are going to cross, and what they cross, once they cross, that's one sign of the bull market ending, which we kind of already have known for a few months. So even if we do have a rally here, I think it might be the last futile rally before a sizable drop resumes. Let's focus in just at the end here. Here's why I'm counting it. I'm not claiming it's the only count, but if it's right, you have your A. At some point there's a B. At some point you want one more move up. Let's focus in just on the end. Here's how we're counting it. We have a leading diagonal triangle for A. Now this could be ABC, and the drop resumes, or this could be A, ABC for B, and one more wave up. So let's just focus in right at the end here and see if we can make a case for wave black B ending here. Because if it is, you should get a wave black C comparable to this large black A. Well, here was your ABC, and if you look down from there, you can see that this low is a fib target of the prior consolidation. And you can also see that if that's gold A and that's gold B, that gold C is equal to gold A. But it doesn't stop there. You look at gold B, you have blue A and blue C being equal, and look at blue B, and magenta A and magenta C are equal. So you've got great Fibonacci targets and Fibonacci wave balance right here at Friday's low. You can count this other ways too. You can count it as an ABC down like this, with that being C, and that being A, and they're all the same. So if we do stop here, you can certainly explain it. I'm calling this a wall into the close. If we're dropping all day and you drop like this into the close, I think it's just a continuation of the existing trend. You'd expect it to resume on Monday. And maybe this will, but here you've had a long period of consolidation. And right when liquidity dries up, you see unrelenting selling, a wall into the close. Now institutions, if they're going to sell, they're not going to wait until liquidity dries up late Friday when no one's there to take the other side of the trade. They're going to make their sells most commonly in the middle of the day on Wednesday when there's the most liquidity. If this is the real thing, we'll just continue. But if this is a false move, which is very likely because of its timing, if it is, it means the retail customers are all selling and the market makers are forced to buy. And if that's what it is, they'll get their money back and a lot more pretty fast, ideally by gapping, by holding this low, by gapping and overtaking this high early. And if that is what happens, then that's black B, and we're going to have a black C up, which can be as strong as this black A. So this is Fibonacci balance right here, and if this holds, could be a strong wave C up, but that's going to be the ball game, and then the decline resumes in style. Monday's pattern has the early high. We could still gap down. Typically it's a rally day with a high in the final hour. Failure is a straight line drop. The late Friday tank is the real thing. It should continue without interruption when trading resumes Monday, but it could extend further Sunday night because the institutions won't be trading and the public will be. The tank is false. It should be rejected promptly at Monday's open, ideally by gapping over its origin or by gapping and clearing the origin promptly. There's strong Fibonacci support at Friday's low, so there's a good chance this is what will happen. If so, we should start a strong and final leg C higher before the decline resumes. Undercutting Friday's low by a significant amount kills the pattern. I think it'll be clear before Monday's open if that's going to happen. We have the pattern with the early high Monday. A very good chance we gap up smartly and start a strong rally, which is going to be the last strong rally before the decline resumes. And that's today's call.